Hello and welcome to Protocol's event on global payments. I'm Tammy Wincup, president of Protocol, and as always, I appreciate you joining us. Today, Protocol launched our FinTech Power Index with our first three segments on payment infrastructure, consumer trading platforms, and robotic process automation. Unlike many indices or rankings, at Protocol, we believe that to understand FinTech companies, you have to do research more than the economic factors and dive deep on other important elements like leadership, talent, governance, product evolution, and the company's role in policy and even politics. I hope you spend considerable time with the Power Index and that it helps inform you on how to think more broadly about the category we now call FinTech. Today, we're here to talk specifically about the opportunities and challenges in global payments and the impressive innovation happening within the industry. We have two great conversations ahead. In a moment, my partner and colleague, Protocol Senior Editor Owen Thomas, will be joined by a great panel. But before that, I'm excited to welcome Protocol's partner, co-founder and CEO of NEOM, Prajit Nanu, and Alex Porto, a principal at Riverwood Capital and a lead investor in NEOM, to discuss how frictionless payments are helping to drive global commerce. Welcome to Prajit and Alex. I look forward to your conversation.
Thanks, Tammy, and thanks for having us. And it's good to put Alex in the box seat, as being founders raising money from venture capitalists and private equity firms. We are always in the box seat. Now it's good to have an investor in the box seat, and hopefully I'll ask some tough questions as well. As I start off, right, Alex, like you're an investor who looks at payments all across the globe. Like, what are the trends, challenges, new things which you're seeing when you think about markets like Latin America or Africa or Asia, where payments is booming at this moment? So what are the key trends you're looking at?
Well, thanks, Prajit, and thanks to the entire crew here for hosting us for this interesting chat. I think the first thing is to realize that this fabric was put together, stitched together in a pre-internet age with legacy systems and processes that are forked and are managed by different governing bodies in every single country around the world. So you want to talk about a mess, that's where the starting point is. And so because of that mess, there have been the first generation of large-scale platforms or aggregators that have been built to try and do away with that noise. And what I see as a growth stage investor within this fintech infrastructure landscape, not just in the United States, but oftentimes you're finding this happen in different ways in different emerging geographies, is that there's some opportunity to leapfrog across certain aspects in terms of the movement to real-time payments, real-time gross settlement, the separation of the data and transmission problem versus the actual banking problem, and the emergence of more suitable regulatory frameworks for this weird buzzword that we call fintech, which is sometimes it's technology, sometimes it's technology that's selling to financial services institutions, sometimes it's digitally native financial institutions that use their own technology in the underlying provisioning. And so that's the macro, which is to say the TAM is huge and it's a mess, and there are problem statements everywhere to go and solve. And so what that means is for strong founders who have the aspiration to build something large, look no further. And I think over the last 12, 18 months, the amount of just insane velocity of deal making and capital flowing in is starting to be a recognition that the system, it works, but not great. And there are things that could be done to drastically improve it. And a lot of investment dollars are now chasing that, in some way, including some of ours.
Absolutely. And I think it links pretty much to what we see as well in the marketscape, right? As you pick any large merchant, pick any large platform, as soon as you open the hood, you suddenly realize that they have 15 different platforms to do card acceptance in different parts of the globe, uh, 10 different banks doing FX and payments. Then you've got three other card issuing platforms. And when you just look at the size of the work which teams need to do just to keep the contracts active, see uptime, etc. It's a massive pain. In fact, recently I was speaking to a friend who runs a startup in Africa and who uses a leading platform in Africa, and he said 35% of his transactions fail because they have aggregated transactions. That means they use someone who uses someone who uses someone, and each of these platforms have to be down for like a millisecond for a transaction to fail, right? So though we keep defining fintech infrastructure, etc., and unfortunately this word pops up multiple times, but it's still day one. It is still at the start. We're very, very, very early. There are a lot of markets where payment infrastructure is still being built, but there's a lot of things you can pick on and drive from. Like some of the work which you're seeing in India, where debit was a massive market because not many people have credit. And that debit platform, which is UPI, has now taken over all payment rails. So you can walk into a shop, you can use a QR code to make a payment. So the infrastructure part we're seeing is super interesting, but the key thing, at least what we're trying to solve is when you open the hood, there should be one platform which basically does all the hard work. You don't need to manage 20 different platforms. You don't need to manage. If you look at majority of the companies which have gone global day one, they would have hundreds of payment teams, right? And we would now see the fact that people who work with platforms such as us, they'll have like less than a handful of people because they are managing one bunch of people who's managing the downstream platforms.
Right. And so, and given that context that I talked about, and then some of the stuff that you're talking about, if you were to zoom out in 3 years, like what's an aspirational end state that you would hope for, your customer base, and that what Neom or other service providers could offer?
I think it's seamlessness, right? Like if you think about even our broad vision is to help businesses pay and get paid across the globe. So if you think about it in a very simple aspect, right? If you're a merchant in the US, you should be able to sell in Brazil, in Africa, collect money, do every bits of the payment because the key is driving frictionless commerce, right? And commerce drives payments. Payments don't drive commerce, right? So if you think about commerce being at the forefront, somebody buying a ticket, somebody buying something on Etsy, somebody buying on various different platforms. Imagine making that seamlessly fluid across the globe, where payments is like like it's like, oh yeah, I'm going to sell in 23 different countries in Asia, and you're not even thinking about payments. That's I think what our aspiration is. That payments becomes an absolute afterthought. Oh, we've got these guys for payments. That's something which I think 3 years is too short. I think it's a 5 to 10 year journey, but I see that change happening. I see the fact that when we speak to merchants, when we speak to large platforms, they're realizing the stress their infrastructure is in by working with 30, 40 different platforms. So everyone wants to consolidate, centralize, and I keep coming back to the word seamless.
Got it.
Thank you both for starting this conversation with us. I'm interested in the last point before we move on over to Owen is, do you believe that your customer set knows that they want this kind of unified backend and unified platform? I think, Alex, you talked a little bit about the market kind of being everywhere and having kind of all of these different disparate silos. I'm interested as you head out on that 3 to 10 year journey, as you described, how you bring your customers along in that.
So I think let me start and I can pass it back to Alex. There are two bunch of customers we see. One bunch who is going through this significant pain and realizing that, oh, we need to declutter, right? There's a large platform we speak to. They have 150 people in payments, right? And it's a nightmare, right? Like, oh, they're managing a contract with 3 people in Africa, 4 people in Asia, etc., etc. So that is a very easy sell, right? And then there are people who are going through the journey, and what people go through the feeling is, if I have more people on my side, I have better control. And we are actually trying to be counterintuitive to that, saying that that's not true. All you're going to do is build teams, and this gives you much better control, and this gives you much better insight. And I think that's the reason why I call it a 5 to 10 year journey, because a lot of people will go. And what we've seen with existing customers as well is they said, no, we don't need you guys. Start with that journey, suddenly realize, oh God, what are we doing? And then take rollback and reach out. And those are the best customers. They don't argue at all. They're like, okay, where do we sign?
Right. Very good.
Yeah, nothing to add on my part. I wholeheartedly agree on that.
Well, thank you both for the conversation, for setting the stage for what I know will be a continuation around global payments, and thanks for your partnership. I'll turn it over to Owen to continue the conversation with his team. Thanks again.
Thanks, Tammy, and welcome to Protocol's event on global payments. I'm very pleased to have a panel here, including Priya Sanger, Deputy General Counsel at Patreon, and Ryan Zagone, who is the head of Americas for Wise for Banks, part of Wise, formerly known as TransferWise. I think we will dive right into the discussion. Global payments is a hot issue. Just this morning, PayPal was reportedly interested in buying Pinterest, both global operations. It seems like it's always in the news, and there's just always some point of tension around the desire to make payments better, but also deal with all of the complexity in payments and bring people along. So we'll be talking about a lot of those themes today. I'd like to start by just having our panelists talk a bit about how they fell down the payments rabbit hole. I don't think anyone really starts out thinking, oh, I'm going to work on payments. But so often it becomes an issue. For me, it was covering PayPal, a little over 2 decades ago, and discovering this really interesting startup dealing with a part of business that at the time I knew very little about, and just getting up to speed by covering it. Priya, Ryan, I'd love to hear a bit about how you got to where you are today, where so much of your focus is on payments.
Do you want to start, Ryan, or do you want me to start?
Go for it, Priya.
Okay, sure. So, hey, everyone, I'm Priya Sanger. I toppled into the payments hole. I think when I first started out of law school, I had a job at Bear Stearns. When I first moved to San Francisco, I was looking for a law job, and I found one at Bear Stearns in the early 2000s. I had just taken and passed the bar and was looking for a legal job. They didn't have that, but I started working there. And shortly thereafter, I got a job, an actual legal job at Wells Fargo in San Francisco. I worked there for a decade on all kinds of payment systems and banking, new projects that were super exciting. When I was at Wells Fargo, Google reached out because they were very interested in developing more banking-like functions for their company. So I worked at Google for 5 years on various, Google Pay. It ended up being Google Pay. It started out off as Google Wallet, became Android Pay, now Google Pay. Worked on a variety of features on that, as well as on different payment methods with the Alphabet companies. So really got to deep dive into those systems. And then I went from Google to Patreon, which is a creator economy company that's been around since 2013. So, really enjoy working there. And I feel like this is the zeitgeist of the times to be in the creator economy space. So that's how I fell into the payments rabbit hole, and I love it.
Excellent. And hi, everyone. I'm Ryan Zagone with Wise. I started in the policy space at the American Bankers Association, focused on payments work. And in that time, realized the complexity and in some cases dysfunction of some of the payment systems that we have, particularly international. And it got my interest in gears turning around some more strategic work around building payment solutions. So I left there, I was at Deloitte for a bit, for a couple of years, and then was on the early team at Ripple, building out a blockchain and crypto solution for international payments. I've recently, or past year, been at Wise, formerly TransferWise, looking at or having built a solution that redefines the customer expectation on speed and transparency for international transfers. We're starting to see that really shift the market on how people think around international payment solutions.
And Priya, then Ryan, could you give the audience some idea of just how big a payments problem challenge you have at your companies, the geographies or countries you operate in, the scale of creators or other customers that you have?
Sure. Happy to start. So Patreon is a global company right now. We're based in the US, but we have entities in in the EU right now. We're hoping to expand from there. We actually have pledged people who are patrons from all over the world. We have approximately 300,000 creators on our site and over 7 million patrons on the site. And these are all growing numbers. So I think during the pandemic, at a time when a lot of the economy was grinding, not to a complete halt, but close, some areas were completely halted. The creator economy, the digital space was actually ramping up. So we actually got a number of people on our site during that time.
So when you think about 7 million patrons, 300,000 creators, and those payments could be crossing borders in almost any direction or combination.
Absolutely. Yeah.
Ryan, your business is all about payments. That's what Wise does. How many countries are you in, or how else would you describe the scale of your operation?
Yeah, Wise has grown to 11 million customers today. We process 7 billion in volume each month. We're 2,700 employees covering 90 different nationalities. So it's global in all sense of the word. Our core product is international payments. Our employee base and our customer base are all international. So it's a space we know and love dearly.
And I love your founder's story about how this was a personal frustration, challenge for them, cross-border payments.
Yeah, I think what's unique around Wise and what brought me here, it's very mission driven around driving a better customer experience. So lower cost and faster payments. And the large majority of Wise's employees are also customers. So we're building the product that we want to use for international payments. And that's led to the speed of growth and us being, we push the envelope on what's known in international payments, particularly on the point of being fully transparent on pricing. So we show the total price to customers. They know exactly what they're paying. And if we see another provider offering a lower cost, we tell that customer before they send the payment through Wise. So it's that extreme level of transparency, treating people fairly in the transparent pricing. It's really driven our growth. It drives the excitement here at Wise.
And Patreon takes a pretty similar approach, right, Priya, with just a 5% fee for most creators, and that covers payments and customer service and other pretty much all-in costs.
Yeah, it's a 5%, 8%, 12%, different payment processing depending on what the creator signs up for and the level of services that they want. So yeah, but it is a very simple, predictable, transparent cost to creators and also to patrons who are paying to help those creators succeed and survive.
I really like that we're bringing two panelists together whose companies prize simplicity, because the recurring theme I've encountered in covering payments over the years is complexity. Many entrepreneurs kind of dive into payments with a beginner's mind, and that beginner's mind is blown by the just the amount of regulation, the geographic complexities, all the rules that suddenly they have to deal with. They go from a rule-breaking world to a rule-following world. So can you give us a few big ideas on why global payments is so complex? Ryan, with your policy background, you probably have some insights here.
Yeah, the complexity around global payments is that the payment rails, the international payment rails, were built before the 21st century. So they weren't built and equipped for this digital, globally connected economy. So they're not really able to support the type of payments that the world needs today: instant, low cost, user friendly. So what we're seeing companies do is build around that type of outdated infrastructure to provide that type of user experience. Patreon and their type of pricing structure, Wise's approach on transparent pricing. There's lots of efforts in the industry to build around an outdated infrastructure. It's I think of it often as, like, I think what Wise has done, very similar to an Apple Pay strategy. Apple Pay is woven together complex card rails, lots of issuing banks, new technology around tokenization. They've woven lots of things together to a simple user experience. Wise has done the same. So we've woven together 88 different domestic payment systems and lots of new technology along the way to create an easy user experience for international transfers. So like with our product today, 40% of the transfers settle instantly. It's funds in the recipient's account in under 20 seconds. That compares to a bank where it's 3 to 5 day delay. And our cost structure, as we built this unique network, is a fraction of what a bank cost structure looks like. So we've found a way to weave together parts that work and build around outdated infrastructure. The interesting part that I think we'll come to in a minute is that we're at a turning point where new infrastructure is being built. Real-time payments in the US, real-time systems in other countries. So the game starts to shift a little bit, which I think is indicative of the excitement we're seeing in payments right now.
That's right. So, Ryan, what I'm hearing from you is that complexity that we deal with often translates to extra cost and extra time, which of course no one likes. Priya, on the patron side of things, you mostly take credit and debit cards, the classic Visa, MasterCard rails. So that gives you a level of kind of simplicity for the consumer, but you have to deal with payouts for those 300,000 creators. And is that where you would say you encounter more complexity?
Exactly. We have multi-currency solutions that we're in the midst of implementing more of right now. And if you just use credit card USD, international credit card transactions, it's done through USD, through US dollars. But if you want people really to feel like you are speaking to them as a company, you want to have localized websites, you want to have local currency for people to pay in to and get paid out of. So I think I see those kinds of solutions are much more difficult. You need a local partner to get a local currency payout oftentimes, or you need a bank that's able to be in that region to do that. But I did want to make a comment on Ryan's, one of Ryan's observations, which is, things are really changing right now, and it's very exciting. And a lot of times what makes change happen is something that you just cannot predict. Like, in the early 2000s, there was 9/11, right, which was a horrific event which took place. And we used to be payments used to be based on paper. We would actually physically go to a bank branch and present the check. And it was a very slow but very dependable way, usually, to get payments made. After 9/11, when planes were grounded for a week, it almost halted the economy completely because people couldn't transact their payments. So, in that era, suddenly electronic checks started to come into play. Now, flash forward 20 years later into a pandemic area, right? And we're seeing now that more, and also not just the pandemic, but a greater proliferation of smart devices, smartphones, which we didn't have in the early 2000s, but we started to get, I want to say 2006 or 7. I remember waiting in a queue at a Verizon shop, waiting to get this new thing that had a computer on the phone. And then much later, we had cameras on the phone as well, which helps with remote banking. You can actually take a photo of the check and deposit it. So all of these things have resulted in a much more digitized experience where actually physically going into a branch or physically going into a location is not often the goal of the majority of people, especially the younger they get and the more quickly and conveniently they want to transact. So we're seeing that now, and that's affecting how payments are going to be affected in the future. People want things that are convenient, that are fast, that are secure, that are cheap. You know, they don't want to be charged every time they go to some other place to get actual physical cash out. They want it to be free because it's their money, or they want it to be very inexpensive. So all of these things are top of mind for consumers, for patrons, for creators, and whatever business you're in.
A fun story about those physical checks. I once toured the Bank of America facility in San Francisco where they processed paper checks, and they had rows and rows of clerks who were dealing with, just dealing with the checks. I think largely the high value ones because they wanted to process those, a little more quickly than you could at the time. And then they had rows and rows of mainframes. I think those mainframes are now a reef at the bottom of the ocean. And that building is actually the headquarters of Square now. So, an interesting, an interesting bit of financial history there in just one building in San Francisco. I often feel, though, it's kind of tragic that it took such a terrible event to get our financial industry off of shuttling paper around in airplanes as our payment system. It so often seems like America is somehow behind the rest of the world. Prajit was actually mentioning India's UPI. I think of Australia, Kenya with M-Pesa. There's so many examples of countries that just seem to have leapfrogged the U.S. And I'm curious what your perspective on that issue is. Like, why is America so behind on payments when we have such a big, powerful economy? We gave birth to Visa and MasterCard and Square and PayPal, and we have Silicon Valley here.
Why don't you start with that, Ryan?
Where do you start with that? I served on the steering committee for the Federal Reserve's Faster Payments Task Force, mapping out the future of payments. And my takeaway from that experience, there's 300 participants on that. The steering committee became mediators for the banking industry. Like, we were the therapist mediating between so many parties. And my takeaway there was we have so many more financial institutions across such a wide, broad size of institution, from very small to very large. It's like 10,000 U.S. financial institutions connect to our payment system. So we have such a larger system, so many more participants. To get a sector that big to move takes time. But when it moves in full force. So it's like the tanker ship turning. It'll take a while, but when it moves, everyone's moving. And I sense where the industry had pent up frustration for many years around the tankers not moving. But now with progress around real-time payments and FedNow, the new instant system the Federal Reserve is building, the early signs of that tanker moving are starting. And we're starting to see some excitement, I think even some relief that we'll see some innovation to play catch up here in the US.
I'll add to that by saying the US is amazing at creating new technology and being kind of iconoclastic, right? And how we approach things. We're really bad at following rules. And if you think about payments and banking, we're talking about millennia, really, if you think about like ancient times as well, we're thinking about hundreds of years of established payment systems and processing, and a very traditional way of handling money. And if you look at a Travis Kalanick type, right? There was the taxi commission, the taxi lobby. He didn't try and play within the rules of that. He basically just said, hey, these are people on their own. They're not employees. They're not professional cab drivers. But I'm going to have this thing that challenges that model. So Americans are great at challenging existing models, and it's really hard to do that in the payments world at times in a concerted way, because there are so many players who are vested in it staying the same, and because each player gets a cut of the commission, right? As money moves through all the various iterations and players. And so somehow subverting that model means people will get cut out. They'll be intermediated and removed, and it affects their business model. So of course, financial institutions are very slow at times to be part of this. I also think if you look at the EU, it has a notion of being a united economy of sorts. It has EU rules, it has the EU commissions. There's the PSD2 open banking initiative in the EU, where they're trying to have standardized APIs, standardized security protocols to allow banks and non-banks to kind of work together to allow people to have greater financial services, digitized ways of accessing their money. In the US, even though open banking, that concept exists, we don't have that same model of tying all the states together. We don't have like a federal policy on this, so to speak. We have these informal notions of, oh yeah, we want to have neobanks, we want to have, we want people to innovate in financial services, but there's no like Ryan was saying, there's no, it's like a ship slowly turning this way. But it's not this concerted action really to do it from a regulatory standpoint. And I find that puzzling.
Almost a ship with multiple captains.
Yeah, exactly.
Going in different directions sometimes. Yeah.
Right.
As long as we don't have a tanker stuck in the Suez situation.
Or a Titanic.
Oh no, even worse.
So jumping to the present, one of the things I think about in the evolution of payments is payments 1.0 was very much, let's say PayPal. It was about e-commerce. You might have someone paying for something, and then that payment had to get to the merchant, kind of one-to-one linked to a transaction. Payments 2.0, I think, was maybe when you think about the early days of Facebook apps, Facebook games, Zynga, Airbnb, Uber, which Priya brought up, where you've got a lot more, action of, we've got to get this money from multiple people and then deliver one payment, which might be collected from many transactions to this person we're giving a payout to. And then you have the creator economy, of course, which really amped up that payments 2.0 model. I was wondering if I could get your thoughts on the challenges in payments now, especially around this, the idea of marketplaces, two-sided marketplaces, payouts, and creators. Ryan, I understand you actually have some news today around creators. Maybe you could start by telling the audience what Wise has just done.
Sure. This morning we announced our latest partner is with Sony's The Orchard, which is Sony's music distribution platform, helping them make instant, low-cost transaction to the music producers and artists around the world. Where we see with these, in this, particularly post-COVID, it's a much more global, remote world. The ability to pay and create globally has actually gone up a lot during this the 2 years of pandemic. The pain points they were experiencing before was like they didn't know how much money would be received by the artist, because the banks along the way would take a fee out. They couldn't guarantee the delivery amount. Or could they track it? Take 2 to 3 days for the payment to be received. Didn't know where it was in that process or if something had gone wrong. So this integration with Wise allows the Orchard to make payments to their artist instantly, much faster than before, and at a much lower cost. There's no hidden fees along the way. So it provides certainty to the artist, to Orchard, to all the distribution companies that are on the platform, to have a user experience that's like sending an email. It's like, you know exactly what's being sent, you know when it's be received. That's the experience that sets Wise apart in our ability to weave together many different payment systems to this single solution.
And Priya, of course, Patreon is synonymous with the creator economy. You've got musicians on there, artists, many other kinds of creators. What have you found most challenging in getting payments to them? And are there concerns around speed, or is it just more the predictability? What's top of mind for that customer?
Yeah. I would say with a platform, you've got all kinds of content, right? All kinds of user-generated content. And so if you're using credit cards or banks who are part of your payment process, you are subject to their policies, which are often very conservative. So for example, if you happen to have, and many content providers, many platforms have not safe for work or mature themed content on their site. And sometimes it's a significant portion of your site, not so much for Patreon anymore, but companies like OnlyFans or other who really specialize in that type of content. They often face issues in having processors want to process their payments at all because they're sexual in nature or have mature themes. And many banks have policies against processing things, even things like marijuana, right? Which is not about sex, but it's still about a drug. They will also have the same sort of thing for mature themed content. So I think one of the biggest issues we've faced is making sure that banks are comfortable with us. And you see, regardless of whether you're an unregulated company or a regulated one, you really have to be careful in your image and what you process. And there have been a number of rulings and changes in network rules that have come out recently that really make us look very closely at the content on our platform and make sure that it's compliant. And at the same time, we want to be the creator's voice, right? And creators don't think in terms of what will the bank process. They're thinking in terms of creation and innovation and expressing their inner artistic vision. And we want to be the creator first company as well. So I think there's a tension there at times in getting payments processed that may threaten that model. For example, I don't know if you want me to bring this up now, Owen, or not, but MasterCard recently had a change in their network rules that's basically aiming to prevent the distribution of adult content, illegal adult content across their networks. They're primarily concerned about child exploitation, which is a very legitimate concern to have. So they have imposed new rules on anyone they imposed the rule on the bank. The bank imposed the rule on the platform. The platform has to impose the rule on the user who's generating the content and uploading it. And essentially what the rule is going to be as of October 15th, so as of 5 days ago, if you have any sort of adult content that's being uploaded, you need to make sure that you've checked the IDs of everyone who's participating in your content, that you get consent from them, that you store that consent, that the platforms are actually reviewing the content before it gets uploaded, and that there's an appeal process for people who feel like they have been their image has been taken and they haven't consented. So those are enormous processes to put into place as a result of this network rule change. So anyone who relies on those rails, they're going to have to follow that process. And that was a very huge thing that affects, I think, pretty much everybody. So that's something that came into effect. And we put together a lot of things to get into compliance with that. The other issue too is you look at, there are a number of groups that look at payment processing as a political lever too. So if you look at OnlyFans, or actually if you look at Pornhub, even before OnlyFans, in December it was shut down because MasterCard and Visa refused to process payments for them. And partially it came out of some activists who said, hey, there are a lot of children being exploited on this site. And it was true. There were children being exploited on the site, and there were also legitimate sex workers who were on the site who had consented to be on, and it was a voluntary thing. And those are the scenarios where I think platforms really have a hard time trying to figure out, especially in the creator economy space, how do we deal with this? How do we work with banks? How do we make sure we're doing things properly? We're not exploiting groups that should not be exploited. No one should be exploited, but that we're not furthering illicit activity, and that is like every platform's issue right now, and it's a big policy. I think Ryan, to your point on having come from the policy space, our policy team is really active on all of these different issues.
Priya, that's fascinating, and it raises a question for me. Is there an inherent trade-off between speed and safety in payments? If we use safety as a catch-all for everything from content regulation to know your customer, anti-money laundering, like, will there always be those kind of regulatory speed bumps that have a solid public policy reason for existing, or is that unnecessarily slowing down payments because it's being, like the policy's written wrong or being applied in not the best manner?
Yeah, it's a little bit of both. If you think about it, there's a morality element to some of this, which comes from religious beliefs. There's also the fact that this type of content has really high chargeback rates and a greater incidence of fraud. So when you think about that, also, it's not. There's a reason why banks do it beyond. There's a practical reason why they're doing it, but also there's that other reason that they're doing it as well. So there are bases for why they're doing this, but on the whole, I wonder at times if like a crypto solution might somehow change this landscape. Again, if I look at OnlyFans, who shut down, for a while, for a week, I think, because their CEO said, the banks were not working with them properly, and then they went into being. If you look at OnlyFans, they might have. You think about could they have benefited from a crypto solution, perhaps, where it wasn't about banks looking at their content and deciding whether it was processable or not. And I wondered why they didn't do that, and I later came to realize that not many people have access to crypto solutions. It's a sophisticated thing, and most of the world doesn't use it yet. It may be the wave of the future, but we're not quite there as a permanent solution for many of these companies that rely on banks.
Ryan, what are your thoughts on the speed versus safety issue? Do you see it as a trade-off, or do you, like Priya, do you kind of question that premise?
Now, there is a trade-off there between speed and safety, and in my view, it's an appropriate trade-off. We want to make sure we're processing payments that are indeed safe to process. There's no terrorist financing or money laundering involved. So there's a healthy balance. I think it's important from the policy perspective to have policy that's clear so that the companies that are having to implement these rules have certainty in what they're screening for and how they should screen it. Right now, as Priya rightfully calls out, there's some lack of certainty around issues around marijuana and how that's processed, what's allowed there, given there's discrepancy between the federal and the bank rule and state rules. So there is some low-hanging fruit right now that can help the payment industry drive more certainty in how they process. That can help ensure that balance is more appropriate. But you want to make sure you're safe in what you're processing, but you also want to deliver fast payments. It's finding that balance there.
What are the new technologies that you're most excited about? Priya, you just mentioned crypto as a possible solution to some of these impediments. There's in the crypto realm, there's stable coins. Facebook's Novi just went live with the USDP stablecoin. We've seen El Salvador try to use Bitcoin. In the fiat world too, there's everything from the ACH system going real time to Visa Direct, wheeling payments using their existing network. What gets you really jazzed about those new developments in payments? What are you watching most closely?
I'm watching. Oh, sorry.
Go
Did
for
you
it.
want me to
Go
go?
for it.
I'm watching closely NFTs. I'm looking at crypto solutions as a payment method. I'm looking at a number of things, but I think those two are the most interesting to me.
And Patreon has just kind of dipped its toes in the NFT waters, right?
We haven't yet. We're definitely looking at it. We're looking at things. Yeah, it's a very interesting area. Again, there are issues with it. Like if you issue NFTs, you have to have some way of authenticating it. There's some issues with it that if we wanted to go into that space, we would want to make sure that people were safe and that there was recourse. And sometimes that's difficult to implement on the back end. So we'd want to make sure were really, even in our MVP, our minimum viable product, that we had something that was very good and protective of users.
Yeah, what's got me most jazzed right now, Owen, is all of it. We're seeing so much happen. My takeaway right now is there's not going to be one solution to cure all the pain points in international payments. We're going to see what feels like chaos right now with so much happening. I think that's just going to further increase with so many different types of solutions coming out. Those solutions becoming much more nuanced and focused in a specific pain point that they solve. A problem in El Salvador is going to look very different than the problems in, say, India, like where the solutions will be much more custom to different problems. And the winners in this space are going to be those, to my Apple Pay analogy, that weave all of these things together into a simple user interface. So I'm excited that these new developments are more like new threads for companies to weave together that enable this faster payments, lower cost payments. And it's an exciting time to see what new threads come about and how that can be woven together for a real holistic payment solution.
I agree with Ryan here. I would also add that on the Patreon side, we have a number of creators and patrons who worry about things like the ecological impact of things like crypto, and they're very concerned about the environment. They're very concerned that they have sustainable, just that they're promoting sustainability for the country, and granted for the globe, and granted that not all solutions are bad for the environment. I know there are solutions that are being worked on that are far less impactful in a negative way on the crypto side, but there is that element of it, and I think there's some concern from Patreon users about that.
I think it's something to keep in mind in that sometimes crypto evangelists have this very utopian view of crypto adoption. But if you have, for example, a remittance, and someone in Los Angeles might be happy to buy some crypto and put it in their wallet and send it to their relatives. Are their relatives going to be set up? Now, El Salvador has actually created like this national wallet with a company called Bitso. Novi is, from Facebook is working in Guatemala, so it's focused on, kind of a point-to-point U.S. to Guatemala remittance solution, and obviously Facebook's well adopted around the world. Are those are those glimmers of what we'll see more of? Do you think that that crypto adoption barrier is going to be solved anytime soon? Such that we can really talk about crypto payment rails?
I think the barriers are twofold. There's regulatory clarity is a barrier,
Mm-hmm.
and the product solutions that are in the market. So there's a lot of investment happening on the product side. There's a growing need for clarity on the policy side, particularly given since there's this global race to own the future of payments.
Mm-hmm.
We haven't talked about central bank digital currencies, but there's many central banks leaning in here around building out their own digital currency as a way to continue to own or drive the future of payments. China is issuing their own digital currency, some geopolitical tension where other Asian central banks are also creating their own digital currency to compete. So there's a lot of innovation happening, crypto, non-crypto. It's ensuring, I think, from America's perspective, that policy enables us to compete, America and the companies here, either at a level playing field or an advantage. I don't see that happening today. The rules aren't crystal clear on particularly crypto, but also other platforms. And when we look at our payment system, our policy is rather restrictive. Other countries have opened their payment systems up so that technology companies and remittance companies can get direct access to payment infrastructure so they can operate more efficiently. The US has not taken that role yet. A fairly closed system controlled by a few number of banks. So ways we can drive more policy clarity can ensure we can be more competitive.
Yeah, I mean, one of the big issues from the legal standpoint is, what is crypto? Is it a currency or is it a security? And depending on the answer, it's going to be regulated or not in the same way. So it's a really big issue that the SEC is looking at right now, and we'll see what happens. There have been actions taken against companies like Ripple and other crypto companies. So we'll see what happens.
Yeah, it's fascinating to me that Facebook, for example, comes out with its Nobi wallet, not using the DM stablecoin it had talked up, and instead using a Paxos stablecoin that I believe is regulated at least by the New York State Department of Financial Services. And then Congress comes in and says, "How dare you roll this out? With the stablecoin we told you not to roll out." And it's sometimes frustrating to see that lack of understanding of nuance, because there's a lot of nuance in payments. There's a lot of nuance in technologies like crypto. And it seems like regulators and lawmakers are not always kind of paying close enough attention. Ryan, is that a fair or unfair characterization of Washington?
I think there's some alignment that could be created that would drive more certainty in the market. There are some signs of hope around. The FDIC and OCC have issued some requests for comment on third-party vendors, aligning the requirements for third-party vendors to banks to ensure that at least that's uniform, that all banks have something similar in place around vendors. But there's a turf war, and there's a lack of alignment across some regulators and policymakers that make it very hard to innovate.
It does seem like the industry is increasingly pushing some proposals forward. For example, the Andreessen Horowitz crypto regulation proposal, which is
what you don't see is companies saying we don't want to be regulated. Like, the interesting thing right now is companies saying we want to be regulated. We want this to be safe. We just want it to be clear on what the rules of the road are.
Priya, in your engagement on policy issues, are you seeing similar issues from Patreon's perspective? Are there issues where you would really like to see more clarity?
Yeah, I think Patreon is cautiously looking at this. Again, we want utter transparency, right, with our users. And when there's an offering like crypto, where it's not really clear, it's not very well defined, and we just want the experience to be a positive one for the people we serve. So right now, we're just not sure what to do with it. Let's just put it that way. It's just it's an amazing opportunity for the creator economy. Absolutely, that exists, and we also want to make sure that that we have a sense of the metes and bounds of it for us, as someone who enables it on our platform. So that's why we're taking our time with this.
Yeah. I kind of think about it sometimes as like the industry's told don't speed on the highway, but they haven't told us what the speed limit is.
Yeah.
And we're left guessing, like, how fast can we go?
That's a really good analogy. You've both given me some hopeful notes on payments. I think sometimes I'm a bit pessimistic from looking at all the barriers. Is there any one thing that really stands out for you as why you're optimistic that we can solve these problems? Ryan, I think you mentioned that 40% of your payments right now are instant. What makes you think that we can get that number up, the technological hurdles, the regulatory hurdles, the industry structural hurdles?
What makes me most optimistic is that we're seeing this once in a generation shift in the US to move to instant rails. So building instant rails for the first time. That makes me optimistic on what can happen here in the US. And then the second is what Priya said earlier. Like the US, the tech companies and the builders in the US are keen to question paradigms and build in new ways. I think that ingenuity is a big driver. So that makes me optimistic too.
Priya, looking at the opportunity in the creator economy with payments, what excites you the most there?
I think I'm most excited by the fact that the creator economy has come to the fore, right? And that creators are finally being valued for who they are. They're producing, they're creating, they're they're changing the paradigm of always being an employee working for someone else. So I find that just amazing in and of itself. And any payment methods that we can use to help creators get paid safely, quickly, predictably, legally, we want to explore. So I'm just very hopeful about what's coming up ahead. Hopeful that this revolution is there, because if you think about it, in Europe, this notion of the creator economy has been around, since for a long time. Being a patron of the arts is a concept that is not unusual there. But in America, where so much of your self-worth is based on how much you make and what company you work for, I love that we're changing the paradigm of that, where you can actually be paid by what you produce and not by more passive ways of making money, like having ads on your content and making passive income that way, or even by working for a company. And maybe you don't believe in that company's mission, but you're a real creator. So this allows for a whole group of individuals to come to the fore and really express themselves. They say that it's $100 billion economy in 2021. It's going to be $100 billion worth of payments processed for the creator economy, and that's massive. So I think we've tapped into something here, and it's a very exciting movement to me, along with the change in payment methods. So those two things combined are just going to be just amazing. I can't wait to see what happens.
Well, it's a fantastic topic. It's a story I've always loved covering. Huge opportunities in remittances in the creator economy. We haven't even touched on business-to-business payments, which are exploding. But unfortunately, we're running short on time. So I would like to thank our panelists, Ryan Zagone of Wise and Priya Sanger of Patreon, and the audience for watching and listening to these great takeaways on the future of global payments. From Protocol, thank you all, and this has been a wrap. Thanks.
Thank you.